What if you invested in a real estate deal where the tenants paid you thousands of dollars on a monthly basis and also pay for the maintenance and repair costs of the asset that they're in? Now, they also pay the taxes and insurance and utilities, they pay all that too. And what if the tenant signed a long-term lease on the property? And what's more, what if there's a corporate or a franchise guarantee on that monthly check? Now, the interesting thing is that this type of real estate actually exists. It's called net lease. Okay, so in these deals, there is a long-term recurring income scenario where the tenant deals with all the expensive parts of the property management and the ownership. There are many advantages to us as owners of these properties, especially if you're using a fund model to buy these assets. So let's talk about it. All right. So let's start with the first. This name of triple net lease. You might have heard of it. In this type of lease, the tenant is responsible for paying the three main costs of property ownership that are normally passed on to the property owner. Okay. The first is property taxes. The second is property insurance, and the third is the maintenance for usually the interior of the building. Now, depending on how the lease is written, a triple net will also cover the exterior, it'll cover the roof, the painting, the walls, the parking lot, the landscaping, whatever. But it's really pretty much defined in whatever the lease says, right? In terms of intricacies specific to that deal. Now, even though there is a tenant in there, they're treating the building as if they own the building, okay? It's also worth noting that in most triple net lease situations, the tenant is able to negotiate a below market rent because they're willing to deal with all these ongoing costs and the management of running the property as well. So it doesn't necessarily mean that the landlord is getting rich off these tenants. It just means that the tenant is committing to taking care of the property so the landlord doesn't have to. So some common examples of these triple net situations might be like Dollar Tree, IHOP, Walmart, Advanced Auto Parts. These are brands that you love these brands typically. You probably went there to one of these things today. These are the types of tenants that usually do this. It doesn't have to be a corporate big tenant. It could be also an individual one. The stuff that we focus on is largely a publicly traded or large public type of company. But aside from triple net, there's also a double net and a single net lease. So what is a double net and a single net? Well, with a single net, the tenant pays for the property taxes in addition to the regular rent, and that's it. This is good for areas that have a lot of movement, especially when it comes to taxes. I mean, at least in favor of the tenant anyway. But like any lease, the landlord can negotiate to include utilities along with the rent as well. In the double net lease, if the tenant both agrees to pay both the taxes and the insurance, so and of course in addition to their rent. There's also something called an absolute net lease where the tenant pays for everything related to the property, including the exterior walls, the roof, HVAC, everything. So there's many moving parts when it comes to these types of deals. Now, when we underwrite a lot of deals, we don't see very many of these absolute net leases, but they're out there. Now, regardless, triple net has many advantages for the landlord. First, triple net leases represents lower risk for the landlord by making the tenant responsible for all the variable costs or even the fixed costs. So they're responsible for just about everything. The landlord can focus on covering the mortgage without the worry of increasing taxes or maintenance. It also eliminates the need for anyone to deal with the property management, which could be a headache, right? So this means no phone calls on New Year's Eve complaining about clogged toilets, burnt out light bulbs. The tenant deals with all that stuff, okay? But this adds up to predictable passive income every single month. That's the big plus when you're dealing with some of these net lease assets. So it's pretty hard to find any other source of income out there, whether it's real estate or not, that is truly 100% passive. Now, I wouldn't say that net leases are 100% passive, at least for us anyway, but they're pretty close, right? Because many of the ongoing expenses and management fall on the tenant. And if you're invested in a fund like the ones that we put together anyway, we're handling all the communication with the tenant anyway. With all that said, it's also important to acknowledge that net leases are not all sunshine and rainbows. There's some disadvantages. Okay, first is vacancies. When they do come up, it can be costly. So depending on the property, it can take some time to find a new tenant. Now, to mitigate this risk, whenever we're looking at these deals, we look at the location, we look at a lot of things related to that asset itself too. This is absolutely paramount. For any net lease property, the location is, of course, super important. The traffic count needs to be very strong. This allow for a new tenant to step in and take advantage of the asset if they like it. But a lot of it has a lot to do with a strong location. So, as you can imagine, the properties that are in the best locations are obviously more expensive. So we need to assess many deals to find the right one with the right balance of cost versus location. So given that net lease tenants are corporate backed with recognizable brands like the ones I mentioned before, and the location is very important too, these properties are going to be pretty expensive to acquire in the first place. So this is a priority item that we look at when we're underwriting a deal. Additionally, we look at the condition of the building as well. We want to make sure that the property itself is in good shape. So we need to manage these unreported or deferred maintenance items with the property itself as well. So even after we buy it, we have to make sure that the tenant is keeping the property up. Keep in mind that for the tenant, it's still not their property. They do recognize that. If the roof starts leaking and they're not responsible for it, you may not know until down the road. So it's something that you have to really stay on top of. We mitigate that risk by sending out real estate brokers that we work with in various locations on a quarterly basis. They go around, they check out the property, send us photos, and send us an overall condition of the asset itself, right? From there, we can have the tenant take care of the repairs if they're responsible to do so, as obligated to in the lease. At the same time, the tenant the landlord needs to make sure the property taxes and insurance are paid as well. So it's not because a tenant is looking to get out of paying these expenses. Most times they just forget, they just don't do it. So what we have to do is make sure that these things get handled. Many landlords choose to just collect the money from the tenant and just cover the taxes and insurance out of that money, right? Again, it depends on whatever the lease says. The lease is really the defining factor. You need a fair amount of capital, experience, and processes to get in on these deals yourself. This is the reason why we put a fund together. We have all of our friends and family get in on these properties, but the cool thing is that they're not just buying one asset. We're buying like 8 to 10 assets in a single one of these funds, and we're buying in various locations, or we're spreading the risk even across different tenants as well, right? So it could be a Dollar Tree, it could be a IHOP, it could be an Advanced Auto Parts, it could be a variety of different assets, right? Now, if you want to know more about how this works, you want to know how to move that currency that they're printing to oblivion and move it into a hard, cash-flowing asset, click the link in the description, book a call. I'm happy to jump on a call with you and tell you a little bit more about it, all right? Be bulletproof, guys. I'll talk to you soon.